Hey guys, it's Ryan Hoffman, and while IT is doing some weird funky stuff on my computer behind me, I want to give you a quick update on market. So you guys heard already that the Fed increased their interest rates by about a quarter of a point, and that will affect mortgage interest rates soon. The way that it works is that the mortgage rates are not controlled by the Fed rate. They are influenced by it, but it's actually mortgage bonds that affect interest rates. Long story short, it takes a few steps before we start seeing those interest rates start to hit the mortgages, but we know that it will happen. So right now, we've got a very short window before it hits where people can actually get their offers accepted, lock in a rate, and be good before they jump up. Now, one other thing, which is like a double whammy of what's going on here, we have the quantitative easing is coming to an end. You remember years ago, the government, when the crash happened, they were buying, the Fed Reserve was buying bonds. They're basically putting money out there, making it easier for banks to lend money for mortgages. And every month, they've been decreasing the amount of money they've been spending on buying bonds. And now they've reached the end of it. They're going to be done. Now, what this is going to do for interest rates is because it's becoming harder and harder. There'll be less and less people buying bonds, and these mortgage bonds, it now makes it so that they have to sell them at a higher interest rate in order to sell them. Long story short, this is going to create interest rates becoming more expensive, and it's going to make, and with the with all this stuff going on with the Fed, it's also making interest rates going to go up. We know that we were in a drastically lower than market interest rate environment for a long time anyway. But this is just a sign that if there's anybody you got that's on the fence, whether you're a buyer who's thinking about it right now and you're thinking whether or not it's time to make a move, or if you're if you're renting right now and you think the market's going to cool down, don't wait, because even if appreciation slows down or stops, very few markets will actually see a decrease in price, in my opinion. Nobody knows for sure, but no major decrease in price. But as interest rates go up, it will create a drastically higher cost environment because rates have a much bigger impact on your monthly payment. So if you're thinking about buying a house anytime in the next year, you're thinking it's about that time, think about getting qualified sooner. Now, something that we also do in this situation, if you're in a position where you're thinking, I got to put 20% down, know that that is not the case. If you're thinking that you want to put 20% down to avoid mortgage insurance, there are other things that we can do that involve strategically paying off other debt that will create you a much more attractive monthly payment for you when you consider all your debts, not just the mortgage. So something to consider. If you want to run through numbers, if you've got a client who's hesitant, who's on the fence and needs to get pre-approved, let me know. We'll take good care of them. This is Ryan Hoffman, Wholesale Capital Corporation, your direct mortgage lender doing mortgages for new home purchase, investment property purchase, refinance of existing mortgages. Hope you guys had a great weekend. Have a great day, and I'll talk to you later. Bye.